What's up, Outliers? Happy Wednesday. We are here for a stock market update, just to take a look through things, see what's going on. But before we get too far, what's going on with you guys? What have you all been looking at? What have you been trading? Anything sticking out to you guys? I see we got Brain in here, Dark Mark, Reese, Kirk. Great to see all of you. And yeah, so what have you guys been trading? What's been the main stuff going on? For me, it's same thing as usual. We're still in earnings season, although that's slowing down, and mostly covered strangles right now as per usual. I think we went over a few of them yesterday during the Open Pro stream, so won't belabor the point there. But there's been a lot of just really interesting opportunities, and the cool part about the market as it's situated right now is I don't see it going anywhere. The fact of the matter is we can find ourselves at just about any moment one tweet away from everything getting flipped upside down, which is why I still am a little bit surprised when I see VIX. VIX is moderate. VIX futures right now are at 1840, which is, again, moderate. It's about what I would expect given everything else more broadly. So yeah, I think that it's good to see VIX resting a little bit elevated compared to long-term averages, but I still think it's a little bit low. Now, I did want to start just by talking about market breadth a little bit. And it's because I think that there's a lot of really important pieces to pull away from what the market is showing us. Now, before we get into that, I do want to mention quickly, I released a video earlier today with Ewan Sinclair. I actually reached out to him and asked to do a podcast episode on this specific topic, not the one we're talking about now, but the one in the podcast. I threw a link to that video in the chat. Highly, highly, highly recommend checking it out. It's because that video, I think, should become part of just about everybody's homework when you're deciding, how you want to start trading, as you're trying to learn about trading. I really, really think that this is a really useful fundamental video, which is why I structured it the way that I did and why I asked the questions that I did. So I think in general, that one is probably must watch video, specifically for the options traders of the world. There's a lot of really, really good detail in there. So make sure you check that out. Todd says, looking at some crossovers, VVIX is elevated. Could we see a VIX spike 50-50 now? Yeah, that's actually really, really interesting, especially with VVIX, because the thing to remember, especially about VVIX, is that this thing can get pretty gnarly when it wants to. If we zoom out over a longer term time frame, we can certainly see that VVIX in general is trending up, but I actually argue that it's just getting back to its general midline. Now, when we look at VVIX, I think there's a great piece of data in here, which is what I've been talking about for a while, this general sensation that markets have gotten more volatile as of late. And again, I'm slowly clicking through different time frames, getting longer and longer term to give you context. But I do think that VVIX itself, you can see from its inception, has absolutely been slowly trending up, very slowly trending up. And I wager that that's due to a ton of different market forces, but I wager that that's not going to change. I think that's going to likely be what it is going forward. So with VVIX getting into the low 100 handle, I actually think that this is a little bit low compared to some of its longer term range behavior. So yeah, Really, really interesting, but clustering right around that super long-term average of about 100. It's like literally just about 100 flat, like maybe just shy potentially. But yeah, interesting call out. I agree. VVIX has looked very interesting here to me. Kirk says, looking at VXX, seems though Vega will always offset Delta in perpetuity. VIX goes up, VXX goes up, Vega goes up. Would it be better to do a synthetics VXX? I guess it really depends on what you're trying to do, Kirk. You already know, I imagine, because that's why you're talking about it, is that I absolutely trade VXX in a bunch of different ways. So the game there is always trying to define like what's the objective and then figuring out what kind of position fits it. Because in this scenario, it almost seems like you're starting from the question of like, how do I put on a trade in VXX? And I would always push people away from that lens just because it's super, super limiting against, you know, again, like what you might be trying to do, what purpose the broader position might serve. Hey, Lauren, good to see you. Taking a look at broad market quickly. We already did this yesterday, so I'm not going to spend a bunch of time. It's actually a little bit, oh, futures just flipped the other way. All futures were red literally right before this. Why? What just happened? What the fuck just happened? That's, hold on a sec. What just happened? And the Russell's left behind. Q's leading, spot vol up, Bitcoin up, gold down, crude down, dollar up slightly, down, corn up, soybeans and wheat down. What the fuck is this? Let's see. Todd says bill to open the government. That's kind of old news. Yeah, we already knew that. Let me consolidate that with this. Yeah, we already knew that. And it's already been headed over to the House, which the House is going to pass it, which we already know. So 3 minutes ago, well, we started here. 8 minutes ago, begun closing argument to urge members to vote to reopen. Okay. This might be a little bit of tailwind, but yeah, this is super interesting because it's already, like, we already know this, and this has already been priced in, but this is like right at 1701. Again, these moves here, it's important to know like how much money can be made in this. This is a nine bar move. It's not huge, but if you look at the overall like change here, it's 21 points essentially. This is, every point is worth $50 in E-minis. It's like there's a decent amount of money. There it goes. And now it's starting to reject. This is very interesting. And the Qs is leading pretty massively. This looks like it's going to continue throughout that vote. The strange part, though, is that, again, like we kind of already know what's going to happen here. And we know that Trump will agree with it. And he's actually planning on doing a signing ceremony tonight. So interesting. Brain says the market is best desperate to hoover up games for any reason. I wouldn't frame it that way. I understand, and it's kind of a fun joke, but the market is so much smarter, man. Like, it really is. Sorry, I'm kind of very interested here. Wait, what the? There. Bitcoin. Why is this almost a percent? The move in Bitcoin is absolutely interesting to me, because a really big argument for a long time about Bitcoin is that it was essentially idiosyncratic or even inverse correlated to the market. So this is a catalyst moving Bitcoin is very interesting. Commodities, nothing there is really standing out to me. Vol coming down. And now the Russell is just starting to participate. It was just flat for literally a second, but still heavily led by tech. If it's moving this much tonight based on this, tomorrow probably going to see some decent moves. What does vol look like? Zeros have been really good. I've had to modify the strategy quite a lot, but zeros have been really good with this recent surge of vol. Yeah, so like, oh, look at that. Wow. Wow. The term structure in the front. Wow. Where's the, I think we have a fucking visualizer somewhere so I can show you what I'm seeing. Is this it? There we go. Let me move this over. So we have 1 day, 2 day, 5 day, and then we'll do 8 day. Term vol 15, 17, 15, 12, 2. Here. This is very, very not normal. This kind of kink in the vol curve is, this is like a very deep premium over the next 2 days compared to the following 5 and 8 day. This isn't priced quite into the level of like a binary event, but this is very, very high vol for this really, really short-term cycle. Let's take a look if you can capture that in their vol plot here. They have a pretty good like super short-term vol plot. Not really. Yeah, it's not doing a great job. Well, I guess it's doing okay, because this right here is showing 1 day. Yeah, okay, so this is doing it. It's just not plotting it. Where if you look at the 1 day on this, it's 12.9%. Right now, it's over 15 in SPX. So the front is very, very heavy. This is all This is all, well, they're missing the like the real front. This one is only going out to 9 days, which is kind of a bummer. I would have really liked to see like super short term. Do we have any other, what is this, the expiration? Yeah, okay. So this is, at least we can visualize it here across the expiration, kind of what I just actually plotted for you. That part's cool at least. What does this go to? Is this the front term? 21 no, if it's not. That's still a primary term. I need to reach out to them and see if we can do a couple things for that tool. Because being able to visualize stuff like this would be super helpful. The Cliff Notes version for what I'm seeing, and thank you for bearing with me as I'm like digesting what I'm seeing, is this flip in the market is more profound than I think it should be, which tells me that the market has a higher severity expectation of the event itself than even what the vol surface has been showing. And that original move on the reopening of the government here really is when that first came through. This was the front run. So the majority of the move already happened, but it does lead me to question how much more is in there on this move. Because other than like my base positioning, which does lean long deltas, so I will still participate to the upside, but I'm wondering, I don't have a specific trade on for this at this point because I really thought the meat was already captured, which still looks to be the case. But with it moving quite this much, now the only thing that draws caution to me is the fact that the Russell's not participating. That doesn't make sense. Like if all of this is based on the government opening, maybe there's an argument to be made that there's a disproportionate impact to large caps versus small caps, but I'm actually not so sure that that's true. So the fact that small caps aren't really participating in the same way is noteworthy to me. So this is a decent move. What is this? Like 0.3% from the low. But from the open, it's like flat. Again, here, let me switch this out. This is the minis. They trade a little bit different. But actually put the index itself. This itself. Curious. Tomorrow might be a little bit more spicy. And you can see that in vol for sure. The fact that the front is this jacked up compared to even 5 days out, that's enough vol to cause some movement. That's for damn sure. Go back in here really quick. I just want to see what the ranges are. So this is looking at 38 points. So you can see that literally the term for tomorrow has already come down to 1486. That makes more sense. This vol will continue to move as the market moves. But this vol, that was really high. When that was what, 1572? That's expensive. So this being now down at 1486, that makes more sense. Let's just take a look at the monies really quick. So I'm seeing the out of the money put at 11.5 and the call at 16.8, which is about right. Busy. Tomorrow will probably be pretty interesting. Speaking of the markets more broadly, let me finish showing you what I wanted to show you quickly before I got completely sidetracked. Main notes, healthcare. Healthcare just cracked highs. Healthcare has been one of like the primary sources of strength. And from a breadth perspective, we now have 51% of names above in the S&P 500 above their 50-day moving averages, which is really good. That's like a standard momentum level setup. And if we take a look at net highs and lows, we can see that in general, it's being sustained. Now, again, I do see that the NASDAQ is underperforming slightly, but not massively. New York Stock Exchange is like 102-ish. So there's a decent number, but it looks like NASDAQ is what, 74. So definitely underperforming slightly. But breadth right now looks way healthier than it did before, bar none. Lauren says Ewan would say sell puts. I think, unfortunately, that's an oversimplified takeaway from what he was talking about. What he's really referring to there, at least if I'm thinking about the example that you're thinking about, which I think I am, that's thinking inception, I suppose, is he's referring to when vol is elevated and you want to play the contraction of vol, which is actually a really important note that's counterintuitive for most people. Here, we'll literally take a look at it. I love that as a topic. For the options trading casuals, this will probably be, I don't know, this will probably mean nothing to you. But if it doesn't, please ask me. Let's go to, what is this? The 17th. Let's go to the 17th of last month. And let's just take a look at something. 17th, here you are. We need to fast forward a little bit. We need to be closer to the end of the day as it was having its big rally. What the fuck? Hold on, did I fuck up? I got the wrong date. What date is this? Oh, that's right. 17th. When the fuck did it get up? Wait, I'm confused now. Was it like literally the last 15 minutes? There it goes. It just wasn't updated. Either that or it's a data issue. Let's see. Right now it's buffering. Speaking of Eric's pet peeves, another one is this platform says pre-buffering. What in the fuck is pre-buffering? How do you buffer before you buffer? You're either buffering or you're not buffering. Like, what the fuck is pre-buffering? That shit makes no sense. We need to go towards the open, by the way. 0830. And just let this. Lauren says it's just a buff. Yeah, it's just buffering. There literally isn't buffering before you buffer. That's like when people say irregardless. Irregardless drives me fucking crazy too. Irregardless is compared to regardless. Like regardless already is saying the thing that you want to say. Why the fuck are we saying irregardless? What I'm trying to do, in case you're wondering why I'm like continuing to change the time, I want to sell a put when it's actually like really high, which it will hurt us as it's coming down just because I want you to see what it looks like. But it's just got to get the time dialed in. I could have made this exercise way easier. I didn't think it was going to be quite this. Okay. I'm gonna simplify my life a little bit. Yeah, no, you're good. Relax. Let's do a 1 month. And then let's do 1 month. We can do 15. We'll do 5 minutes. Here we go. Oh, it's back a little bit further. Yeah, this will work here. So this is like right after the open. That's on Friday. Like 0650. Okay. Bree says people misuse irregardless so much they added it to the dictionary. Yeah, dude. Like, that's when you know we're playing the wrong game. Like, we are literally working with the absolute lowest common denominators at that point. There's no, like, the word already is what it's already saying what you want to say. Why are we adding more shit to it? But that's like standard English language, is we just overcomplicate literally everything for the fuck of it. So that's just how it goes. All right, we should be able to get our trade on. Or fucking not. What is happening right now? I'm going to go to 0631, literally a minute after the open. I don't think it cratered that hard right after the open. This thing's being so weird. But what I want to show you is how like selling a put can look on days like this, even though from a directional lens, it looks like you will get fucked for the life of me. It's a minute. It's got to be something with the data at this point. Whatever. This is fine. Whatever, man. Okay. Let's sell a couple. What I'm going to do for the example, I'm going to, as always, like we should never just look at one. If we're going to do the exercise, we should look at a few. So let's clear out all of our random nonsense from this. Let's clear the formatting and let's take a look at a couple scenarios. I'm going to move this off to the side so I can go a little faster. I will show it to you again. But I'm going to look at the 5 DTE. I'm going to look at the 12 DTE, and then we'll take a look at the 19 DTE, and then we'll take a look at the 33 DTE. And we are going to need the strike price. We're going to need the delta. We're going to need the premium. And that should be a decent starting point for us. Okay. So for the put side of the equation, please, no, it's all fucked up. It's all fucked up. Let me see if this is all fucked up across all of them. You motherfucker. Okay, so this one looks normal. So it looks like we're just not going to be able to look at the weeklies with this data, unfortunately. That's how she goes. So you only get to look at one. So sorry about that, but that's all you get. What I'll do is I'll look at a couple different deltas at least. So you'll be able to at least explore that. The first thing that you should look at that, again, if you're used to trading options, that should catch your eye is the deltas. Like, why are the deltas so fucked up? The reason why the deltas are so fucked up is because this thing has an expectation about what is going to happen. And you can see that being priced in effectively real time. Spot price right now is 24.51. And let's take a look at the 30 strike. I'm just reorganizing all this for the new format. We're going to look at a 30 strike. We'll look at the 25 strike, the 20. And then we'll do, that should be enough. Actually, no, we'll do one more. Let's do what, like the 15. We'll get something that's like super far out of the money. Okay. First things first. What are we seeing for our deltas? Our 30 strike is a 1 delta for sure. Our 25 is probably, again, the math there is fucked up, but it's probably a 0.9 delta. The 20 is a 0.46 delta. And then the 15 is a 0.06 delta. Again, this is one of the coolest things about options, is that it literally is telling you essentially what's going to happen. You just have to know how to read this, but it's literally telling you what's going to happen. The 25s are for 5.50. The 20s are for, I'm going to call it like $1.85. And then the 15s, those are for 12 cents. Okay. Here's what we have so far. A few things that you should know. If we take a look at the percentage off of spot price, I don't really care if it's positive or negative. Don't really pay any attention to whether or not it's positive or negative. It doesn't matter. I don't understand this fucking, I just cleared formatting. If I just cleared the formatting, why is it still giving me fucking dates for shit? It's ridiculous. You stupid Google Sheets, you're smarter than that. Okay, so all of these show you essentially how far apart these are from moneyness. Again, don't worry if it's plus or minus, it doesn't matter. Just look at the absolute number. The absolute number here is very interesting, isn't it? Because we can see things that if we move in just these $5 increments, this is nothing even remotely close to linear. You can literally see where the market is expecting this to move towards here, without a doubt. However, with it currently elevated, you can see the deltas as what they are. So now let's fast forward time, shall we? So this is going to be with spot price at 24.51. That's this grouping here. And we will repeat this exercise one or two more times, just so that you can see the difference, how the delta, how the delta moves and how the premium changes. So what I'm going to do is first just fast forward towards the end of the day. And this will be literally intraday, same day, but later. So this is spot price 24.51 is when we started. This is at the open. This is at the close. Both of these are on 17 oct. I'm not going to do the open and close for all of them, by the way. I'm just doing it for this one because there was some movement on the day itself that I think is worth looking at. Okay. Let's take a look at our 30. Our 30 is still definitely a delta of 1. Our 25 delta of 1 for sure now. The 20 is a 0.6. And the 15 is a 0.06. Very, very interesting. I kind of feel sad for myself when I get so excited and say shit like very, very interesting for this. But the shit is interesting. So, fuck you. What is this? 595. 595. Let's take a look at the 20. The 20 is like 205. And then the 15 is, what is that? Wait. Okay. Now, let's just see what's cracking. This is essentially what you would have collected if you had sold your puts at the beginning of the day. That's this line here. This is on 17 October. This is what, let me make it a little more clear. This is what they're worth towards the end of the day. The first thing that you should notice, and the most interesting one here by far, is this one. The reason why this one's so interesting is because over the course of a day, this thing went from a 0.46 delta to a 0.6 delta. That's a significant change. Again, if we just contextualize that as a percentage, I am not the guy that's just going to fucking do that in his brain, but I could do it with Google Sheets. You get 30%. It's a huge change. literally just over the course of a day. And again, this isn't like the front. These are 33 days to expiration because the front contracts didn't work, unfortunately. All right, let's just fast forward now. We'll just go like 2 days. And I think this will probably be enough because I really want to go through the collapse. Yeah, perfect. There's the collapse. Let's take a look at what these are at now. So this is now 21 October. And we will repeat this uno más, one more time. Move this off to the side. Forgot to change spot price on the last one, guys. What was it? Like what? 21, 20. Okay. So now we're at 17.59. Our 30s, those now have a delta of 0.75. The 25s, those have a delta of 0.7. The 20s, those have a delta of 0.51. And the 15s, those have a delta of 0.06. The premium for the 30s is 11.7. The premium for the 25s is 6.95. The premium for the 20s is 2.6. What? I totally forgot. 265. And then for the 15s, those are at, I'm just going to call it 0.09. All right. Here's where we're at so far. So far, your current change in terms of premium from where you would have first sold these. And since we're selling, we want it to go down. So I'm going to do the math in, oh, it's not. I'm going to do the math this direction. And you can see where we sit. This is with spot at 17.59. Why does this matter with spot at 17.59? You can see all of your trades have lost money so far. But what's the important part? The important part here is that if you take a look at how much spot has changed from where you started, which was 692, that change is profound. If this thing dropped 7 points, why is it that this is not 7 points more? We would expect this was a delta of 1. That means for every 1 point move in the underlying, we would have expected this to change by 1, but it didn't. The delta in this premium is actually significantly less. This premium only moved by less than 2 points, 1.95. The premium here didn't change much, even though the underlying changed massively. The delta would have likely given you the expectation that it would have been a much more significant move, as you should guess. Before we get into answers, let's go a bit further. We're going to go to 31 October. This originally was 33 days to expiration. Now we're at 19. And I'm going to move this off aside again. And let's take a look at the example. Alternate colors so it's easier to okay. Let's take a look at the 30. The 30 is a delta of 0.78, a premium of 11.4. The 25, delta of 0.73, premium of 665. The 20, delta of 0.52, premium 2.34, call it 15. That's 8 cents with a delta of 6. All right. Really, really important lesson here in terms of the response of VIX to changes. What's happened now? From the beginning, our spot price has dropped 3.26 points. We're now a little bit deeper into this trade. We went from 33 days to expiration to 19. So a decent passage of time. If we look across at our P&Ls here are still in the red, but they're starting to shift. Notice how your P&L here went up again, and is now starting to come down. But notice a fascinating change. The fascinating change here is that your deltas from the 30 and the 25 literally went up, increased. Your deltas went higher, yet your premium contracted. That's volatility. This is the kind of position where volatility has dampened this entire thing so far. If volatility had not been contracting, again, you would have gotten your face ripped off on deltas. So again, if we look at this 0.75 delta, if we look at what the delta impact here, this isn't accounting for gamma or anything, your premium should have gone up by $2.45, but your premium went down by 30 cents. Again, this is all kind of rough numbers, but what's the important factor here? The important factor here is that you have other effects, vega and theta, that have offset over $2 of premium impact. This is what Ewan is talking about, Lauren. When you're trading things like this and you're essentially trying to run the contraction. Oh, that's kind of a bummer. We can't get to 19 November. I just realized I picked an expiration that's ahead of time here. Let's just go to the 10th of November. That's the closest I can get us. And then we'll check it one more time. This is now 9 days to expiration. And, oh shit. Spot price is what? $17.92. So at spot price at $17.92, we should completely expect spot price or our premium to have gotten worse. Premium should go up pretty massively here. Let's see what actually happened. Delta for the 30s, 0.82. Premium for the 30s, 11.55. For the 25s, 6.7 and 0.87. The 20s, we'll just call it like 2.1. Premium here is 0.61. And then for the 15s, those are down to 2 pennies, 0.02. We can't get to expiration, unfortunately, yet, just because the trade technically is still open. But again, the key things to note, in this case so far, you're still losing money. Vol itself did not overwhelm the contraction in VIX. Now, well, what time is it? We have time for one more example. So I want to show you one more that we can take all the way because it'll give you a good idea of what this actually looks like. But again, the most important thing to take away from where we're at right now is from the start of this exercise, we literally went down 6 points. These things started with deltas that were effectively deep in the money, right? 80 deltas. Yet you're not seeing that relevant change in your premium, and actually in these 20s, which have been in the money, and the delta actually went up again significantly, it actually contracted on its premium. The thing that you should pay attention to here as well is the fact that the further out of the monies haven't moved. They've not really moved. So if you started with this trade, you would have seen effectively no movement for the majority of it. But then at the very end, as we get closer to expiration here, you're starting to see it drop off a little bit, which is also super cool. All right, let's take a look at one more. We're not going to do quite as many steps in one more. I just want to go back further so that we can play something all the way through. And ideally, we want to play something with a little bit more magnitude, because we didn't even get a chance to sell it when it was up here. We ended up selling it when it was like down here, which that's not ideal for this kind of thing. We need to get something like this. What was this? This was on 2 August. Let's go to 2 August. And let's see if it is even, wait, I fucked up. What date is this? 5th. I want to see if it even lets us. Oh, of last year. Duh. There we go. There we go. Cool. This is great. And let's go a little bit earlier in the day. So let's do like 0930. This is Pacific time, by the way. It's doing its silly thing. Let's see if it settles out. We'll give it a chance to pre-buffer. You know, that super important process of buffering before you buffer. Completely logical, makes a ton of sense. There we go. Okay, that's fine enough. Let's go a little bit earlier. We'll go to 7:30. I want to catch it when it's, yeah, like up here in the 40s or 50s. I think that'll be at least a more extreme example, which is good. And then we literally can take this, replicate it. I don't really care about the date. The main thing we need is the days. Cool. Is broken? Yeah, it's kind of broken, but that looks correct. And that also looks correct. Okay, cool. We can take a look at 2 expirations, which is awesome, actually. We'll grab one more. Again, we'll do this all at the same time. But the first expiration that we'll look at is 14 AUG, which is 9 DTE. And then the second that we will look at is 44 DTE. Don't need these. Spot price right now is $43.99. I guess I'll just do them both in line. All right. We're ready. So spot right now, $43.99. let's take a look at some strikes, shall we? 9 DTE. We're going to look at something with a delta of 1. So we'll pick the at the money. We'll just do the 45. And then we're going to try to find stuff with slightly lower deltas. We'll go to the 19, which is showing us what it thinks the at the money might look like, which is a 49 delta. And then let's go to like a 15 delta. That puts us at the 16, which is a 14 delta. Great. And let's grab our premiums really quick for the 45s. The bid-ask spread on these, as you could tell, this is exactly how it goes. It'd be completely fucking haywire. So I'm literally just going to use the mids. I think it'll be the most, like the way it can be most consistent. $1.67. And then the 16s are at like 20.2. And then let's go to the 44 DTEs really quick. And then I'm literally just going to fast forward one time and we'll go like super far. The 45s, those are still your 1 delta. And those are at 1955. The 19s here are at a 75 delta. And those are for $1.10. And the last ones, the 16s, those are for 57 cents. And that is a delta of 0.75. Okay. The only thing I'm doing really quick is I'm reorganizing premium and delta because I noticed myself reordering. This is just part of my mental disease of having to be efficient. And this has us on 5 August. Let's go to 14 August so that we can get to the expiration for these. And let's see what they would look like. So we're going to do this exercise again. This will be on, I said 14 August. And we will see what our spot price is. Oh. Let's go to our 45s. Those are whatever the current intrinsic value is. So I'm going to keep those at certainly those. The deltas here are fucked up. That's a delta of 1 without a doubt. And spot price is 17.16. So we can literally just figure out how far in the money these are, which is like 27.84. So 27. Let's go to the 19s. No idea what these are reasonably priced at. It looks like about $1. So I'm just going to go with that based on the last. And the delta for those is a 0.38. And then let's go to the 16s. Last on that was 2 pennies. That looks about right. And delta on those is 0.29. And then let's go to 44. Well, originally 44 was the 18th step. Why? Why do this to me? Thank you. 45s. We have a market here at least. These are 28.15. Got to be a delta of. I'm going to go with gut instinct. I think those are delta of 1. I don't think that. The 19s are 365. And those are a delta of like 0.45. That I think makes sense. The 16s, those are $1.34. And those are a delta of 0.8. 9. So here's what went down. Your spot price moved 26 points. And over this duration, you experienced a pretty significant loss on your 9 days to expiration options. You saw the 9-day expiration, the 45s that were a 1 delta. The 19s, this is really the main thing to pay attention to. What happened with these 19s and these 16s? With the 19s and the 16s, with 9 days to expiration, even though you sold the 19 puts when the underlying was $43.99, $43.99, you sold these then, the underlying dropped 26 points. It went from $43.99 to $17.16. Yet the premium on your 19s went from $1.67 down to $1, with a delta dropping from 0.49 to 0.38. This is what Ewan's talking about. Now, the reason why I show you the in the monies and the out of the monies is to give you a sense of how they move. Because you notice the thing that's wrapped around 50 deltas had a pretty significant drop. But if you take a look at the thing that was at like a 15 delta closer to the wings, not quite what we would consider like super far out of the money tails, but take a look at what happened to the premium here. It went from 22 cents to 2. Delta went up from 14 to 29. This is the cool thing about trading vol. And this is why vol is so unique when you trade it, is because it has a lot of very, very, very unique factors that most people genuinely don't understand that well. And I don't blame them, because the shit is completely different than most of what you've seen. If I gave this scenario to anybody else, if I said you sold a 50 delta put that was 9 days to expiration, you sold a 50 delta put, the underlying dropped, well, I'll put it in terms of a percentage so that it's not based on the price. The underlying drops 61%. Does your short put make money? I think the overwhelming majority of people, myself included, would absolutely say no. Unless you include the fact that this is a volatility product. As soon as you tell me it's a volatility product, I know I have to apply a completely different mental model because of the uniqueness of how these things behave. This is the cool stuff. So, Lauren, I hope that that example help, tie the points together that Ewan was talking about, because I think it's, again, super important stuff to be aware of. But this stuff behaves a lot differently than how you might expect, which, again, is the cool part. So, any questions before I bounce for the evening? Anything that you'd like to touch on? Anything that you want to take a look at? And then in the meantime, for tomorrow, we're doing skill development for the pro members. And then the live stream on Friday, the beginner stream, I actually think I'm going to slot in one additional episode. So the original plan for episode 4, so it was originally going to be 5 episodes. Now I think we're going to have 6 because I want to do something. The game plan is to talk about the concept of edge. I actually tried to make a post about it that went like really, really poorly. I think it's just because, again, Reddit is what Reddit is. I want to explain a little bit around the concepts of what edge actually does and doesn't look like. So that's my game plan for Friday, I think. Which, I mean, we might be able to bake that into the, maybe we do that. Maybe we just bake it into the episode 4 already, which is building a portfolio. We could talk about edge there, but I think it's important. Kirk says, would that selling puts vol example work in GME during meme craze or similar meme names with elevated vol? Yeah, similar concept. Would it work exactly the same as some sort of index vol? Definitely not. But yes, this is actually the exact kind of thing that you would look for. Yeah, exactly what Lauren's mentioning. That was one of the precise examples that we discussed, because it's stuff like GameStop that has these kinds of very unique moves. So your instinct is correct. Sweet. All right, gang, that wraps me up. I'll see the pro members tomorrow for your skill development live stream, and then I'll see the rest of the outliers on Friday. Be an outlier. See you guys later.